Now, the question we'd like to address right now is the bottom falling out of the property market? And if it is, what will it mean for you, your family and your home? 0500 909 693, burden at bbc.co.uk, or text us on 85058. We're talking about this because next week the Council of Mortgage Lenders will meet to discuss whether the market is in turmoil. They say recent events have sent a shockwave through their industry. Now, in the last few days, we've heard from one mortgage company that they've seen the biggest house price slump in 12 years, a drop of 0.8% in November. And at the same time, the Bank of England says the number of mortgage approvals has fallen to its lowest level for nearly 3 years. So how likely is it that house prices will start to fall? And if you're thinking about selling your house, or if you're a first-time buyer, what are your concerns? I will put your thoughts to two experts, 0500 909 693. Here's what you've been telling us.
I'm Clive from Woking.
My name's Claire, I'm from Kent.
I'm Matt, I'm 23 years old.
My name is Peter, I live in South Manchester.
We've been in our house for nearly 10 years now, we've got a pretty small garden, and we would dearly love to move up the ladder.
I bought a house just over a year ago with my partner in Devon. We've since split up and are having to sell the property. Now, with the climate as it is at the moment, I'm starting to lose quite a lot of money.
Prices are prohibitive, the jumps are significant. Personally, I'd welcome some form of correction in the pricing.
I'm currently doing a house share with a couple of lads my age. Been trying to get on the property market for about a year now. Find it rather impossible.
It doesn't even look like I'm going to get my deposit back, and I feel truly gutted that this relationship's leaving me well out of pocket.
We decided nearly 10 years ago to get into the buy-to-let market. We have let out those properties now for the last 8 or 9 years, and for purely personal reasons, I want to get out of the market.
The amount I'm earning and the price of properties, it's just impossible.
People bleat about, a slump or a drop, but to be quite honest, we've built up a vast amount of equity in the house, which is paper money. It doesn't exist unless we ever sort of drop out the market altogether, which isn't an option when you're living for a family.
I've heard about a possible crash in the property market. In my own circumstance, I think this could be quite beneficial, depending on how much it drops. Obviously, 4 or 5% isn't going to make a great deal of difference. But some experts were talking of possibly dropping down to 40, 45%. And in that case, that would make a massive amount of difference because you're nearly half in the price of property.
It doesn't even look like I'm going to get my deposit back, and I feel truly gutted that this relationship's leaving me well out of pocket.
So if there was a crash in the property prices, I think I would welcome it. In all honesty, it's the only way I'm ever going to get on the market.
It would be really worrying for me if house prices were to drop, because at the moment the house is on the market at the absolute minimum that we can accept for it. So if the prices go down any more, then I'm going to be losing even more money.
We can withstand a fall of 5 or 10% and still make very good profits.
It's just a truly horrible situation to be left in after my relationship split up, and then to have all this going on as well. And I was wondering if anyone's got any good advice on what I can do with this to salvage a little bit of my hard-earned cash.
Well, how many of those stories are familiar to you? I'd say one or two of them will be. With us to talk about this, standing with his black cloak and scythe over the housing market, is chartered financial planner Jonathan Davis. Good morning to you.
Good morning, and thank you for that welcome.
Nice to have you with us. And Peter Rawlings, Managing Director of the property company Marsh & Parsons. Hello.
Good morning.
Right, 30 seconds then, Jonathan, on what's going to happen to the housing market in the next sort of 4 or 5 years.
Indeed, over the next 4 to 6 years, house prices in the UK will fall between 30 and 40%. By the end of next year, they'll fall 5 to 10%.
Peter?
Blimey, that was quick and rather depressing. I think he's totally wrong, I'm afraid. The market is driven by sentiment. Really, nothing has changed. Obviously, we've got the subprime crisis in America. Nothing has changed in this country. The market is definitely different than it was. It's dropped a little bit and will probably drop a tiny bit more, but not very much. We've seen, and really what's caused that, in my opinion, is 5 interest rate rises in the last 14 months. And I think that'll come back next year. I think we're talking about an interest rate drop next year, both in the UK and in America, and I think that will stabilise the market. It won't go shooting up again for probably a while.
OK. What I think is probably very confusing for everyone sitting at home, sitting in their cars, listening to this, is we have 2 experts who clearly know their industry extremely well, who have such polar views on what's going to happen. How, Jonathan, are you so certain about what is going to happen in the market?
In the last 10 to 15 years in the UK, house prices have risen over 200%. It's a natural market movement for prices to then adjust downwards by between 30 to 40% over a few-year period. The fact is that interest rates are 9 interest rate rises higher than 2003. They were 3.5%, they're now 5.75%. We have a global credit crunch, which means that the easy money that was available even till just a few months ago is simply no longer on the table. You can no longer, if you fog a mirror, you can no longer get the money that you want. And the buy-to-let sector, which has absolutely kept the market up in the last 2 or 3 years beyond any economic fundamentals, has now petered out. There is no buy-to-let sector now per se, because people simply can't get the money that they want.
Okay, and I paint you as this rather sort of comical figure of doom because it's what we hate to hear, but actually, is it such a bad thing if house prices drop?
It clearly depends on your point of view. The fact is, the bulk of the population believe that their house is going to secure their retirement. If they bought 10 years ago, they might be right. If they bought in the last few years, they're probably wrong. Clearly, if you are not in the market, then you're going to do very well out of the fall.
Peter, that is why we don't like what Jonathan Davis has to say, isn't it? We're blind to it because we just don't want to hear that our entire life savings that we've poured into property could be gone.
Well, I just think I'm afraid Jonathan wouldn't be on this programme if he was saying it would be dropping 10%. So it's a very nice, frightening figure.
Well, now, hang on a sec. That discredits Jonathan. I mean, I think you're talking here from, I presume, Jonathan, as scientific a basis as you can.
I am something of an economist. I'm a housing expert in my view. I'm a chartered financial planner. I've been giving investment advice for 20 years. OK, come back, Peter.
Put me in my place. Fine. You see, I mean, for instance, the buy-to-let market is still there. You definitely won't be borrowing 90% on your buy-to-let anymore. I accept that. But if you borrow 60 to 70%, it'll still wash its face. It'll still cover the outgoings will be covered. The income will cover your outgoings. So that's not a place to be. It's not a place to write off, I don't think. If you want to invest your money, my view is the property. Well, it's not my view. Property has been the best performing asset class for about 30 years. So are you going to put it in stocks and shares that you have no idea who's playing with them, who's messing around with them, or are you going to invest it in a bit of real estate, either near where you live so you can look after it, or in various parts of the world which may be more risky? My view is to look after your retirement. The buy-to-let market is still very much there.
That's very interesting, Peter. Tell that to the 30,000 people who've had their home repossessed this year. Tell that to the 45,000 that the Council of Mortgage Lenders expect will lose their home next year. I actually put it at 60,000. Tell that to the buy-to-letters who bought in the last couple of years who can no longer make a profit on a monthly basis from the rental income and the cost of the mortgage, which, as you know, mortgage rates are rising irrespective of what the Bank of England does, and they're clearly not making capital gains now. That's shown in every index that we look at. The fact is, this market has had a brilliant run and it's now ended. OK, I want to just go to our listeners' views on this in just a moment, but thank you very much to both of you. Before that, though, 11:20, a couple of texts on this. House prices, I'm unlikely to get on the ladder. Who cares if they slump? The whole market is predicated on greed and me, says Lance. And Neil in Bristol, similar. Thank God the market is crashing. An end to the greed of buying to sell. I'm staying at home sweet home. Steve in Southampton, good morning.
Hi there.
What's your view? Very well, thanks. What's your view?
Right, well, when you listen to so-called experts like you just had on your radio programme, and they turn around and say that houses have gone up 200% in the last 2 years. I bought a house 2 years ago for 160,000. It's not worth 480,000 now. These people should have the licences withdrawn for coming out with drivel like that.
Steve, let's let Jonathan make clear exactly what he was saying then.
I said house prices have risen 200% in the last 10 to 15 years.
10 to 15 years.
Right, sorry. But anyway, if I bought a house 10 years ago for £100,000, it's not worth like 300,000 now.
Well, OK, but the point of this discussion is, are we going to see house values drop, price values drop? And is that something that worries you? Are you relying on your house to provide you, for example, with financial security later in life?
No, not at all. The reason why people are not buying houses and the housing market has sort of so-called slumped is because of the interest rates. And once they come down next year, like they've been predicted for the last 2 years to come down again at this time, then people will start buying houses again.
Steve, thank you very much. I want to put that point straight to Jonathan.
Interest rates have risen 5 times since August 2006. They're now at 5.75%. The highest in many years. People say to me, well, of course, it's not like 12-15% of 15 years ago when we had the original crash. And I'll say, well, that's fine, but people are borrowing 3 times as much, so actually there's no difference. In fact, on top of that, there's a great deal of unsecured borrowing, credit cards, personal loans, kitchen loans, car loans, etc. So if you add it all in, people are actually at the end of their tether in trying to service their debt. If interest rates fall, which indeed they may do in the short run because there is a global credit problem, so the Bank of England may need to do something to ease liquidity. The manifestation in the UK was the first run on a retail bank in the UK in 100 years. That's the Northern Rock. If interest rates do fall, do you know what? It's not actually going to do very much for mortgage rates, because mortgage rates aren't directly tied in with the Bank of England rate. They are related to what's called the interbank rate, and the interbank rate has been soaring. It's now at 6.5%.
See, thank you. Sorry, not Steve. Peter. I don't understand interbank rates, but I do at least understand that there is a ceiling, isn't there, at which at some stage people will say, I simply cannot afford to spend above this point. So at some stage house prices will have to stop rising.
Yeah, and they have, and that's a healthy thing. There's nothing worse than a market that is out of control going upwards forever. We're not arguing about the market that has slowed. It's definitely slowed, and some areas will definitely fall, some with oversupply. However, what we have here in this country is an extremely strong economy. We have great employment. We have rates set to fall, and yes, you're right, they have risen 5 times over the last 13, 14 months, but let's face it, they were incredibly, historically low before that level.
OK, what I want to do is just fire at you a number of scenarios and see what your advice would be to people who were in this situation. For example, if you're a first-time buyer, you're about to put everything you have into, I don't know, say a 95, 97% mortgage, and your repayments are going to be, let's say, 60% of your monthly income. Peter, what would your advice be to someone in that situation at this moment?
Try your best to buy a 2-bedroom flat in a worse area, because if push comes to shove, you can rent out a room.
Jonathan?
There's general agreement that house prices are going to fall over the next year. My view is that they will definitely fall over the next year, and they will definitely fall over the next 5 years. Why would anyone want to take out a huge debt on an asset which is falling?
Because it's their home.
Well,
it's not just an asset, it's a home, it's somewhere to live.
Well, yes, you can rent a property, and indeed, as you well know, Peter, if you look in the back pages of one's local paper, there are reams and reams of pages of properties for rent. Mm-hmm. And if you compare the cost of rent of similar properties to buy, you'll see that it's actually more cost effective to rent.
I'm sure it is, but it's not a home. Okay, it's a rent.
Let me pose another scenario to you. Let's talk about a family with 3 children. They're outgrowing their, let's say, 3-bedroom house. They want to move up to the next peg on the housing ladder, right? Would you say to them, when they're perhaps nearly at the point of paying off their mortgage, to take out, I don't know, another £100,000 in order to facilitate that move? What would be your advice to them, Peter?
I would definitely do it. I would. And it's easily said, I grant you. But what I would... They want to live their lives happily. They don't want their kids to share a bedroom. And therefore, they're going to have to push themselves, and they're going to have to make allowances for it. You know, maybe not go on holiday 4 times a year. Maybe not fly to Spain. There's definitely things you can do. It depends what the important things in your life.
Okay, Jonathan?
It's truly remarkable that you're suggesting that people should stretch themselves so much that they don't actually have a life. What they can, in fact, do is sell their property. They can then, that's assuming that someone will buy, because we know the demand is far, far lower than it was even 6 months ago. And secondly, they can rent a far larger property with a load of money in the bank, absolutely no risk, and they get a lot of interest from the bank, because interest rates have risen, as you've said, and that interest can go to paying the rent. it seems so logical to me.
Okay, thank you. So Lindsay has some text on this.
Yeah, Anthony in Surrey says, down, 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 fantastic. About time all those smug idiots congratulating themselves for absolutely nothing. Bobby, though, says, if we need 500,000 houses, how can the prices go down?
Absolutely.
Does not demand influence how the prices are set? And Michael in Nottingham says, has that advisor heard of demand and supply? Are people going to start living in boxes?
We have John in London who's contacted us this morning. John, hello.
Hi, Rachel, yeah.
Now, you are at a very critical point in the house buying process. What's your situation?
Well, we're just about to exchange contracts on a flat in London for 250,000. We're taking out a 90% mortgage on that. And we want to know, whether it's wise to go ahead, really.
Crikey. Right.
Can I answer that?
Yeah, Peter, go first.
It depends on all sorts of things. Where is it? What is it? How long the lease is? What floor it's on? If it's on a busy road and a basement, then probably no is the answer. If it's a great, let's face it, property all the time in whatever market. If it's a great property, you've got a ready, willing, and able market for selling and buying to it. If it's an 18th floor walk up or a very busy road, or if it has a problem, then you probably shouldn't buy it. No.
Presumably, John, you're confident that it's a decent buy.
No, it's a nice flat. It's a garden flat, 2-bedroom place. It's a good place. But
right, cautiously.
When you hear your experts say something like, the house prices are going to drop by 30-40%.
Yeah, well,
experts have been saying that for
obviously,
10 years.
if you're borrowing £225,000, you don't want to lose half. You don't want to have half of that as negative equity.
In order to give you the full balance of opinion, I do want to bring in Jonathan and hear what he has to say.
Absolutely. I view that a property worth 250,000 will fall to 175,000 within 4 to 6 years. I wouldn't touch residential property with a barge pole, and that goes for commercial property too. It's as simple as that.
But Jonathan, is that irrespective of where it is? I mean, blimey, you're really you're painting everything with the same brush here.
Property is property is property.
It's not. That's absolute rubbish.
If I can just answer your question, the people say to me, "Well, there's incredible demand." That's funny because there's 1 million properties for sale in the UK. The people who were buying at the bottom of chains in the last couple of years were the buy-to-letters. 330,000 buy-to-let mortgages last year. From a standing start 12 years ago, when there wasn't a single buy-to-let mortgage, there's now 1 million, and they are falling out of the market left, right and centre.
That is bringing us to an whole other area, which is a completely different discussion.
Supply area.
Peter, thank you so much, and Jonathan, thank you so much. It was really interesting to hear both of you, and I don't know whether that will have allayed your fears or comforted you in any way if you're a homeowner or thinking you're about to be a homeowner. Possibly, if you're thinking of renting, you'll be feeling quite smug this morning. Thanks very much to all our guests.